talked about, well, first I'll just talk about Bitcoin for one quick second. So remember, we talked about this trend line last week, right? Bitcoin remains above that key trend line. It remains above the 3 shorter term moving averages, which are in a bullish configuration. And what is it doing now? It is consolidating below the 200-week moving average. I will emphasize once again that typically consolidation below an important level of resistance means that price will break above that level of resistance at some point. Maybe sooner, maybe later, we don't know. Let's look to the stock market to find some confluence. The SPY. Okay, what is going on here, kid? It's exactly what I've talked about so many times. I refer to this as the best buying opportunity of 2023. That is when price comes back to retest the almighty trend line of 2022. That's what this is. This is the retest of the trend line, as you can see on the weekly chart. Look where this weekly candle closed, kid. It closed right on that trend line with the 50-day moving average as support. I mean, that's literally exactly what I've been looking for. So what do you think I did on Friday? I bought things, because when you see what you've been looking for, when you see the back test of the important trend line, that's exactly what I've been looking for. This is the moment where I need to be buying. This is what I wanted to see. I'm seeing it. I have to be buying. Does not mean that this whole thing can't just fall apart next week. That's obviously very possible. But I'm going to talk about a few reasons why I don't think that's what's going to happen. But before I get into that, just look at the DXY really quickly. We have follow through to the upside on the DXY. So this makes sense that we're having that trend line backtest. Everything is moving like clockwork synchronicity at this point. So here's what we want to do. We want to remove the inverse Fibonacci off the DXY here, because we want to figure out how far this retracement is going to go. So we want to add the non-inverse, I guess the regular Fibonacci, you would call that. And that's going to help us determine where we think this DXY bounce is going to get to. Do we think it's going to get all the way up to the 702? Possibly. But then when you consider the S&P 500 already at that trend line here, already backtesting the trend line, it's like, how much higher is the DXY going to fall, considering that the SPY is already at the destination that we've been looking for? I'd speculate the DXY probably isn't going to rise a whole lot more. Now, maybe there's a situation next week where it spikes up pretty high, because you can already sort of sense that the fear is returning to the market. Now you have the Fed coming out and saying, oh, we're going to have to raise interest rates even more. Maybe we're going to do 50 basis points. You're getting all that sort of fear rhetoric sort of re-entering the market. So I believe this coming week could be a very volatile week, and we definitely could see some price action below that trend line. Just because price goes below the trend line, that does not mean that, it's a big collapse and it's just a bear market nightmare and this whole uptrend thing is dead. That doesn't mean that. The only time I'd really get concerned that the uptrend here is a failure is if we get below this level, right? Because what do we have right now? We have a sequence of higher lows and higher highs. That is the definition of an uptrend. The only thing that would invalidate that uptrend is if this down move breaks below this first higher low. I don't see that happening, because that would be a major fall in the SPY. And the reason I don't think that's likely is because look where the US dollar already is, right? The US dollar it's already began its retracement. That means that it's unlikely that the US dollar has a whole lot more headroom to continue the upside. Now, that could change next week. That's why, we have to be very dynamic. We have to play both sides of the trade. But right now, we're seeing a confluence of things that we've been expecting to see, and that's what I've referred to as the greatest buying opportunity of 2023. Now, what I want to discuss also is the nature of the fear that is returning to the market. So I'm going to refer back to one of my favorite things that I refer to so many times, because this is becoming very relevant. It's the Fed funds rate against the Dow Jones Industrial Average. So what I want to just review here is what has happened in the past when we've been in interest rate rising cycles, and what has happened in the past when interest rates are cut. So if we go back all the way to the turn of the millennium, kid, what has gone on here on the Dow Jones, right? this is what I've discussed many times. In interest rate rising cycles, the stock market has generally risen. Look at this. Look what you see right here. From 2004 all the way to 2007, you see interest rates in an up cycle. What happens when the interest rates fall? Prices fall. Look at this. If we look 2015 all the way to 2019, what do we see for interest rates? Interest rates are rising. When they begin to fall in 2019, you get a final excessive euphoric move, and then what happens? The market freaking crashes. Look what's going on right now. Interest rates beginning to rise, and the stock market is getting a major bounce. Is that a coincidence? Obviously, I do not believe anything is a coincidence, least of all this. This is what happens. This is the way it goes. So when I hear the Federal Reserve talking about raising interest rates more and they don't see a point in time that they're going to cut anytime soon, that is a bullish signal. That's like what happened here in 2015 to 2019. That's like what happened here in 2004 to 2007. That is typically what causes stock market prices to rise. Interest rate rising cycle, stock market prices rise. Now, one thing that was really exciting to see this week was the first time I've seen a content creator actually talk about this very concept that I've been talking about for a year, literally, that the stock market rises when interest rates rise. Good old blockchain backer on his video 2 days ago literally brought up this exact same thing. It's the first time I've seen somebody corroborate this notion. I mean, I don't need anybody to corroborate it. It's basic. All I have to do is look at the chart. It's not complicated, but it is nice to see somebody also recognizing that this is just the way it goes, right? So what you need to realize here is the fear that people have of interest rates rising is just a misunderstanding of how the economy has worked over the past 20 years, okay? And a lot of people are misinformed about things because they don't really do their own research. They don't know how to overlay charts and this kind of stuff. It's really basic. All you have to do is look at history to see the truth. You don't want to take other people's word for it because most of the time people are just taking other people's words for it. You know what I mean? It's just this giant game of telephone and the reality just gets distorted. You got to go to the source. This overlay, I believe, is the source of a lot of the truth and the reality that's kind of giving us a clear picture of where the market is headed. So all this to say, when I see the SPY back testing the trend line that I've been looking for, and I'm hearing the Federal Reserve talk about they're going to continue to raise interest rates, that is all the green lights that I need. You understand? Like, everything that I've been looking for is coming together in terms of a bullish scenario. And I will remind you that the first video that I made of 2023 was a video discussing that it's very possible that this, in fact, is the bottom of the bear market. That still remains to be the case because what happened next? This thing made this higher low here. This is the December higher low. This was a very key higher low because if this didn't hold, well, then it wouldn't have made sense that this is the bottom. But now you are in an uptrend in earnest. It's the scary part of the uptrend when you have the pullback, but if you see the bigger picture, you realize this pullback is exactly what we expected. It's the back test of the key trend line of 2022. Price needs to back test it. It's bullish until it collapses all the way through and breaks below this low. Now, I would expect this week that there's a very strong potential of major volatility. Something like price falls, significantly below the trend line. But if that's what happens, I would expect a major bounce off of the break below the trend line where you have a situation where you have a weekly candle with a massive bullish hammer beneath it. You know what I mean? Something like this sort of candle here, or even this sort of candle here, where price falls way below the important level of support and then it closes either above or very nearly above that level of support with a giant wick underneath. That's possible this week. And I think that's possible because of the fear that is sort of entering the market. Of course, the fear shows up when prices are falling. Of course, the Federal Reserve starts talking about they're going to raise interest rates when the prices are falling. And no one understands that that's what we want them to do. We want them to raise interest rates. That is what is going to cause this stock market to rise. It's only when they cut the interest rates that the stock market will fall. Look at this uptrend in interest rates. Do you think this uptrend is done anytime soon? No. I've discussed that this is likely to go on for years, kid. Literally years. And if that is the case, what do you think the 2020s are going to be like? Probably roaring, kid. Do you understand what I'm saying? It's basic history stuff going on. Look at history, and then you'll kind of know what the future is. It's kind of that sort of thing. Obviously, you got to have a dynamic understanding. You got to be very flexible. You got to move on your feet, and you have to trust that the cycle will resolve, kid, okay? And I believe at this point, the cycle is going to resolve to the upside because there's no end in sight for this interest rate rising cycle. No end in sight. We're not even above where we were in 2007. It's like, come on, here we go. This is good things, right? And the fact that no one realizes it's good things and everyone's fearful of rising interest rates, that's just another check in the box for perfect. No one understands what's going on, so do the opposite of the herd. Great, perfect. So what am I doing? I already said it. Buying. Huge buying opportunity right here. And if it falls below, then that's honestly a bigger buying opportunity. If it falls below this December low, well, then guess what? We have another situation in our hands, which could be a little bit more concerning. But that's why I play both sides of this trade. And you know what I literally did at the top of this candle? What did I do here? I went aggressively short at the top of this candle. I bought put options here. I literally positioned myself to make money in the event that this market came down to backtest the trend line. That's exactly what happened, right? And because I don't know that this trend line will hold, I don't know that price will hold here, I'm still holding positions on the short side. I'm not foolish enough to believe that my thesis is exactly correct. So of course I'm positioned to make money if this market continues to fall, but I did take a lot of profit on the short side when price came down here, left some on the table, put a lot of that profit back into the long side, buying call options, buying options that will make money in the event that the market rises. I believe that's likely to happen. And I believe that it's likely that the DXY is going to find some pressure in some of these retracement levels, whether it's the 382, whether it's the 0.5, it could be the 618, it could be the 702. All of this is a retracement at this point. And there's no telling how high the retracement's going to go, but when you consider the fact that the United States is going deeper into debt and they're raising interest rates as they go deeper into the debt, does it make sense that they want the dollar to rise? Absolutely not. Do you really think the Americans are going to let the dollar rise if they're increasing the amount of debt that they're in as it is denominated in this currency? Obviously not. It makes no sense. The only way that the Americans are going to service more debt that they are about to go into is if they keep the dollar under pressure. So I believe this is just a bounce in a downtrend. I believe the dollar will continue to fall. And that is exactly why I remain bullish on equities and I remain bullish on cryptocurrencies. It's that simple, kid. We got what we wanted. This is the time to buy. If the prices fall lower this week, you buy more, kid. Okay? God!